Well, good morning everybody. Welcome to a YouTube live. It is the 12th of September. We are Thursday. Just give me a yes if you can hear me and you can see the Forex Factory calendar in front of you. Haven't done a review as yet, so going through the currency pairs will be new to me. I did have a quick scan this morning. I didn't really see a great deal, to be honest with you. So we will be going through the currency pairs in order. We'll be taking a look at a few of the pairs that we looked at in the last webinar. Just give me a yes if you can hear me and see the screen okay. And we'll run through the Forex Factory calendar. So first of all, we have a little bit of news out today to pay attention to. We have some euro news out at 12:45, which is refining rates. I'm not too worried about this. Monetary policy statement, we could see a small amount of movement as a result of that. We do have an ECB press conference to pay attention to at 1:30, and then we have some dollar news out at 1:30 as well. So a few things to pay attention to there. Going into the evening, not a great deal. We do have a little bit of New Zealand news out at 11:30. So if you are in any lower time frame trades, just pay attention to this, because New Zealand that time of evening can really move the market. Good morning, said Ashraf. Good morning to you. I think you may be the only two in the room this morning. But that's how I like it. I like the room small and intimate. So if you guys have any questions, chuck them in the chat. We'll literally be going to be going over some of the trade setups that we went in yesterday. I was in a trade yesterday, which I was not able to post. It did go on to win. I was out for pretty much the most of the day, so I couldn't get a signal out to people, but I'll be running through that trade on the euro yen. It won for 55 pips. So let's get rid of the Forex Factory calendar. I don't think there's a great deal to talk about this morning, so it's going to be a relatively quick webinar. So if you do have any trade setups, anything you'd like to talk about, then I am more than happy to run through those. Aussie dollar CAD is the first one, guys. Aussie dollar CAD. So we've been looking at this very big triangle for a period of time now, and it does not look as though we're going to get an entry. Instead, we've just rallied all the way up and we have almost hit targets. For those of you that were not here when we ran through this, well, I'm going to run through it again. So starting off on the daily time frame, structure leveling down at this level. We had a double bottom down here, an indication that we were going to go higher. As we drop down the time frames, this is what I saw. I saw a swing in the market, a directional move, and then I saw the market adhering to this trend line. Now, when we originally looked at this, it was 1, 2, 3, and 1, 2, 3, 4, 5, and then we were looking for an area to get involved with here. Now the problem is, if I go ahead and highlight this area, then test, and this test just here, we did not have a confirmed break above, close above this area. And what that meant is we didn't actually have any confirmation that the market could go higher, even though we had the daily double bottom, which was by itself an indication. But actual price action, actual candlesticks, we didn't have the confirmation we could go higher. Now with these morning Khan, with these triangles, I do say on the higher time frame that the middle is where I like to have my stop behind, because that typically offers us a safe place to put stop placements. And look what actually happened. I'm going to just extend this and only highlight the wicks. We came down to that level and boom, we rallied up. Now there was more which we can add to the confirmation here. Around this middle area is where I always say look out for rotation patterns, particularly double bottom. So we're going to drop one time frame lower. You can actually see the pattern better here, and again, just look what we've done just here. Rotation pattern. This would have been a key area to get involved. Again, for me, we didn't have the break above, close above, so it wasn't for me. But double bottom, just here, we did not, did we? No, we did not close above this area, so still no confirmation, and then we pulled back. And what you could have looked for within this area is dropping down another time frame and looking for a rotation. Good morning, Ralston. And that rotation could have been in the form of another rotation pattern just here. Now, was it valid? Yes, it was. We'd come down for one test, two tests, and did we have the RSI confirmation? Well, we had divergence, guys, but we did not go oversold, so it was not valid for me. But the RSI is only required for when we come down for the second test. Once we physically break above the V point is this area here. Once we break and close above it like we did on this candle, then that was a sign to get involved with the trade, and this would have been your risk. And I'm just going to go back out to the 240, and your reward would have been this much. Okay, guys, so a lovely setup here. Offered you two opportunities right here on the middle test, and you can see we held it, and that's where I always put my stop. You also had a psychological number 9,000 to hide your stops behind, and boom, we broke to the upside. The only problem with this trade is we did not have the confirmation we could go higher. But you could have taken the big daily double bottom of confirmation, and this looks like it's going to be a nice winning trade for about 65 pips. About 65 pips, so very nice. Did anybody get involved with this trade? It's highly unlikely. Well, it's unlikely now we're going to see a pullback and a chance to get involved. I think we're just going to go and rally up here and hit those targets. Said no. So did Ashraf. Doesn't matter. At least it's there. It's knowledge, it's understanding how to trade the pattern. Why I personally didn't get involved, but if you're a little bit more aggressive, you could have used the double bottom here, you could have used the double bottom here. There was several other ways to get involved. You had the psychological number. Everything was setting up that we were going to go higher, but for me personally, I just needed a little bit more confirmation and the break above, close above. But look at the risk you would have had on this trade, about 22 pips for 65. So a very nice 3-to-1 reward to risk on that trade. Other than that, do we have a potential back pattern setting up here? No back pattern. So nothing for me now on the Aussie dollar CAD. That trade is pretty much played out. We will take a look at the Aussie dollar. We've been monitoring this for a few days. We are in trend. We're waiting for another break above, close above, and a pullback. So let's go and do the higher time frame analysis on this one. So zoom out, get some perspective first of all. Structure level in at this long wick, and as we zoom in to see structure, you can see we've held structure, and boom, we have now broken to the upside, validating this double bottom. Question is, where could price action go? Well, what I'm noticing is that we are clearly bearish, but if I do this, we have 1, 2, 3, 4. Is there a possibility that the fifth test could come up to this trend line? Okay, whether the structure level is a trend line or a horizontal structure line, it's irrelevant. They're both structure. We're drawn to structure. Structure acts as support and resistance, just the same way that we are with psychological numbers. So there is a high probability here that we're going to come up to retest this trend line for a fifth time. So what that means is we can, because we've had the double bottom and we've had confirmation we're going to go higher, we can look for trend. We can look for a pullback, a move higher, a pullback, and a move higher. So just because we missed our optimum entry does not mean that we cannot get involved with the trade. Okay, so what we do is we drop a time frame lower to the 240. And what I'm going to do, actually, we can see the trend better on the 60, guys, so I'm going to drop to the 60. Okay, so the trend on the 60 was move higher, pull back. I'm not going to draw every retracement out, but move higher, pull back, move higher, pull back, and we haven't as yet made a new high. Okay, but if we do make a new high and we see a pullback, then this area just here is the entire outside return. We can then look for an entry reason, and that entry reason can be many things. We can, just to name a few, we can look for X to A to B, B to C, CD completion for a back pattern. Number 2, we can look for an AB equals CD pattern. It can even come into structure lows, where we can then look for a double bottom and get involved just here. If you want more confirmation, wait for a break above, close above, and a pullback for a 26.18, and then a chance to get long. Also, we can look for head and shoulders. Okay, head and shoulders can be, let me just draw this back on. Head and shoulders can be where we see the pullback, a move lower. Okay, head and shoulders takes a lot longer to produce rather than just a double bottom. It can take an extra day, maybe an extra 2 days, but it will give you extra confirmation and give you pullbacks within that potential rotation. So there's lots and lots of things that we can wait for. We can also look for a few other things. I personally like to look for psychological numbers, so that's every 100. Now there is not one here, but we can then also look for fibs, look for some fib confluences. So a 382 in this area, we can take the fib from this leg. We can look for a 61.8 down in that level. We don't know where the fibs are going to be drawn from and to as yet, because we don't know where the high is before it starts coming back down. But these are all things that I like to look at for us to be able to get involved with these trades. So lots and lots of things, you know, bats, ciphers, Gartleys, double bottoms, head and shoulders, AB equals CD patterns, double bottoms, I think I already mentioned that, but lots and lots of things that we can look for. So Aussie dollar at the moment for me personally is just a waiting game. We're going to be waiting for that extra confirmation. Any questions on the Aussie dollar? It's not too much to talk about, guys. At the moment it's just a waiting game. Just a waiting game on that one. Just checking out my New Zealand dollar trade, which has gone into arrears. Euro Aussie, for those of you that were in the webinar yesterday, we're still looking at this very large back pattern. And okay, so first of all, on the dailies, we've got this beautiful trendline structure which we've come in for a 4th time, and we've got this great big back pattern here. If we zoom in, the completion of this back pattern is the 886. So we've tapped the 886 now. We've also tapped the psychological number 16,000. And as mentioned, we are now within this trendline structure. So now's the time we need to be looking for entries into this huge trade. Just let me draw this out though, the fib from the swing high to swing low, and look for those potential targets, which will be the 382, and show you that the worth of this pattern is a ridiculous 291 pips. What that actually means is that the risk on the trade is also going to be very big. If you're looking at putting your stop down at the 113, it's 228 pips. Or if you're looking at some sort of rotation pattern like this, well, your stop is going to be reduced to something like 100 pips, maybe something like that. So looking for a rotation pattern here is going to be key to getting involved with this trade. Just going down to the 60. What I'm noticing here, guys, on the 60 is that we had a move lower, a pullback, and okay, technically we have not had a move lower because of this wick here. This means that we do not have a confirmed break below, close below. I thought we did, but we don't. So no indication here that we're going to go lower. I personally would like to see price come a little bit lower, the RSI go overbought, and then produce some sort of double bottom. So very large trade. We may get an entry on this tomorrow. If not, we may get one today, probably tomorrow though, from the look of it, because it is a very large trade. That Khan says will be better to touch it after ECP rates. Yep, yeah, just as a reminder, guys, we do have those news events out today. This was a trade I banked 55 pips on this morning, and I'm going to run through the actual setup. So what we'd seen here was a move lower, a pullback, a move lower, a pullback, a move lower, then a pullback, and then a move lower. And we were working our way higher. So as I drop down to the 240, just give that a minute, guys. I think I pressed 2540. It offered a trend continuation opportunity. Yeah. Go to the 240 time frame. So this is what I was looking at, guys. We had a move higher, a pullback, a move higher, a pullback, a move higher, and a pullback. Okay, so we have the trend on the 240 time frame. This is the outside return. So as per the trend continuation rules, I'm allowed to drop one time frame lower and look for a higher high, higher close candle. Just before I do that, I want to make sure that there's room for the market to go higher. The very highs of structure are just up here, so one test, two test. However, I'm not too confident at how high we can go because overall we're looking bearish on the dailies. So I wanted to be a little bit conservative, so what I did was I took targets at a retest of structure highs just here. You can see that we've just hit those, and it also came in at a psychological number 1900. So as per the trend continuation rules, drop down one time frame and look for a second chance entry. Now, second chance entry is within the outside return. We highlight the candle bodies, and quite simply we look for a higher high, higher close candle. And right here, guys, right here is the higher high, higher close candle. So I got involved here. Stops an ATR below the low, which was 11, puts me on 15, and targets were a retest of those structure highs just up here. I'm going to make that red, make that green. Green is for money after all. That's what we're all after, some of the green. So I had a risk here of 36 pips, and the reward was 59. It says 59, I actually banked 55. And there you go, you can see that we rallied up. So a very, very simple trend continuation trade with a positive reward to risk, using quite simply nothing more than a higher high, higher close candle. And that's how we work trend continuation, using the second chance entry. Very, very simple. Let's move this off to the side. So what do we look at next, guys? What do we look at next? Just one second, guys. Okay. So I was just checking something. Right, let's. I've not done the Euro New Zealand in quite a long time because there's been nothing on it. Let's take a new look at the Euro New Zealand. Okay, not too much here. So what we had a nice rally, a small pullback and a rally. The problem is we're within this wick here, so we've technically held this entire area, but at the same time we also violated this level of structure. So we violated that level of structure, but then we've come up and kind of double bottomed here, and then we've broken to the downside. So this is just pure consolidation for me. If we go down to the 240, what I'm looking at now is that we had a move lower, a pullback, a move lower. We've now had a pullback, and now we've had a confirmed break below, close below just here. So this is now indicating that we could be coming lower. As you can see, we are trending quite nicely. Can't say pound New Zealand played very nice since yesterday afternoon. On the break lower, it certainly did. You could look for, I'd wait for a longer extension here, then a pullback, and quite simply another trend continuation trade using a first, second and third chance entry. Where could price come to? That is the big question though, because when we're looking at getting involved with a trade, we need to look at our entries, our stops, our targets. And if we've got no prediction as to where price can come to, there's no point getting involved with the trade, because, well, let's just go out to the dailies and take a look. So we've just violated to the upside here. Okay, so this is now an indication we're going to go higher. But what we did is we double topped in the middle of no man's land, and we broke to the downside, and we violated this level of structure. So we've got no confirmation really as that we're in trend here on the higher time frame. If you were looking at taking targets, this would be the area. In fact, I'd go for the closes of the candles in this internal structure level just here. So let's go down to the 240. That internal structure level is a little bit bigger here on the 240. So yeah, this is what I'd look for. I'd look for a pullback and a chance to short down to around this area, which is the 17,000. Now that's been quite conservative, but that is an opportunity that can happen. Let's go to the 15. Here on the 15, there would be no trend continuation opportunity here because we have double bottomed. But that double bottom is an indication that we're going to go higher, and so your trend continuation is lower, pullback, lower, then you pull back, and then a chance to get short. But it needs to be on the 60 because you have a double bottom there on the 15. So going to move that out of the way. Is there any questions at all, guys? Just one moment. I just need to do something, guys. You could just give me a minute, guys. I just need to do something. Be back in a moment. Okay guys, where was we up to? We were at, let's go over the euro dollar. The euro dollar is a trade that I'm actually in, and we shorted the double top up here, and this is now providing a second chance entry for you guys. So what we did is, when we have a double top and we physically violate the V point, which we have done here, you can wait for a pullback and a 26.18 trade, and we are just about to tap that 61.8 fib, giving you a nice entry for a short. Now I'm actually in this, and I'm actually in the wrong account, so I can't show you this, but if I just do this, you can very conservatively play for targets down in this level, just down here. However, bigger picture, guys, you can hold this trade all the way down to these three levels of structure here. 1, 2, 3, and there's 450 pips up for grabs if you're holding it down to this level. Absolutely huge trend continuation trade. How long will it take? Who knows? Who knows? But here on the dailies, look at what we've done. Let me just delete that out of the way. So we had a move lower, a pullback, a move lower, a pullback. This highlighted blue area was the first chance entry. You've had a lower low, lower close. You're seeing a pullback for a 26.18 on the lower time frame. Very high probability here that we're going to come lower. So I was 50 pips up. I'm only about 25 now, something like that. Targets we talked about were a retest down here for 100. I'm personally going to be holding this trade all the way down to a lot lower level. So if you wanted to extend your targets but still be conservative at the same time, then look for an AB equals CD pattern coming into this level, giving you something like an extra 100 pips of reward. So a very nice opportunity that I'm in. Hopefully we're going to see the move lower. You can see here on the 60 that we're now seeing a retracement, but there's nothing to be worried about. We've had the confirmation that we're going to be coming lower, or that we can come lower. And look at that, guys, as well. You have a potential flag pattern setting up. 1, 2, 3, 4. If we hold this structure level and put in a red candle, then this is going to be a valid flag pattern to short the market. So lots and lots of confluence there on the euro dollar that we're going to be going lower. I'm going to move that one out of the way. What else do we have to talk about? Pound Aussie. There was absolutely nothing on the Pound Aussie, guys. I don't think there is anything still to talk about. Let me just check out the 15. No, I'm not even going to go over the Pound Aussie. There's absolutely nothing on it. The Pound Yen, on the other hand, was the trend continuation trade we spoke about in the last webinar. How it actually played out. As you can see here, we had the move higher, the pullback, the move higher, the pullback, the move higher, the pullback, and we were looking here for another move higher and then a pullback. The problem we have at the moment, okay, let me delete all this workings out. The problem we have is there is no trend continuation trade now because we are retesting the highs. Now, what we could have looked at for a trend continuation trade is this back pattern. It's not valid, guys. It's not valid. The C point here is higher than the A leg. So let me delete everything off now and do the higher time frame analysis, and we will take another look at this. So structure level in down here, double bottom, RSI confirmation with divergence. We've broken above the V point, and if we get a bigger idea of what the trend is, we had a move lower, pullback, move lower, pullback, move lower, pullback, move lower, rotation pattern. Where do we expect price to come to? Well, this is the outside return, and we are not quite at that level, so there is still room for the market to go higher. The RSI is not currently overbought. We are seeing a reaction though right at this level because we are at a psychological number, that 13300. So there is room for the market to come higher, as mentioned, to this outside return, but we are seeing a reaction as a result of that 240 as a result of that 133 psychological number. And here on the 240, move higher, pullback, move higher, and we're double topping. Okay, so it's not a valid double top that I can personally take, but it does scupper any chance of me getting involved with a long opportunity. So I'm afraid this is now a bit of a washout. So it's just not going to provide me any type of opportunity unless, as mentioned, we just see a move higher, a pullback, and then we can see that move higher. Thing is, if we do that, we've already then come into our structure level. So it's looking like the pound yen now is not going to be an opportunity that I can personally take, which is a shame. We got the move we expected, but just no entry. Just no entry on it. Let me take a look at the 5 range. Does anybody have anything on the pound yen? Just checking out the 5 range. Nah, nothing. Okay, let's move that out of the way. Really missing my 5 range trading. 5 range typically makes up maybe 30% of my trading, something like that, and I haven't had a 5 range trade in a month. Haven't had one. Pound dollar. Nothing has changed since yesterday. You can see that we're still looking at this trend line and we have not violated it, and we are pretty much in the outside return. So let's do the higher time frame analysis on this one, but again there's going to be nothing for me really. Zoom out first of all. So structure level on at the area where I expected price to come to, which was here, and as we zoom in you can see price did do that. If we get a bigger picture on the trend, move lower, pull back, move lower, pull back, move lower, pull back, move lower, pull back, and this is the outside return, and you can see price has now come into the outside return, but we also just violated this level of structure, so we are technically between 2 structure levels now. So there's going to be just no opportunity for me. There's going to be nowhere to move, and look at what we're currently doing. Double, triple test up in this area. Okay, triple test up in this area. There is no RSI confirmation, though with it being a pound pair you can take the RSI at 70, and this is at 77, so it is valid for a triple top up there. You may also have, guys, move higher, pull back, move higher. We could see a head and shoulders here. How low we will actually come, I don't know. Because we've already hit structure lows, but we could see a move here to the downside. With this triple top, what we could also see is, let's clear this up a little bit, a break and close below this level, a pullback for a 26.18. That will give you a very nice amount of, very small amount of risk. And you could look then for, as a minimum, an AB equals CD pattern, which would be very, very shallow here. So I'd personally look for something else. I'd look for structure. There isn't really a level of structure that I would be paying attention to. So you could technically just hold it for a retest of the lows, or you could, if this was your outside return, move your stop on every outside return until targets were hit down here, or you would technically stopped out, but I have no real area here as to where we can take targets. Khan says he's in it. So are you in this triple top and potential head and shoulders, Khan? Or am I a bit late catching up with the chat? Let's take another look at this. This might be something I'm interested in. So we've come into the wicks just here. Wicks are when we see rotation patterns. We can drop one time frame lower. So we had the move higher, pull back, So what would be the risk on this trade right now? Stop's going ATR above the high, which is 27, gets me just above that psychological number. 88 pips. Yeah, we have no confirmation daily time frame. Okay, so you short this, yeah. We've just got, you see, we've held structure down here. Let me load some more data. We'll take a closer look at this. So let's load 4,000 candles. And we will see how major the structure level is and if we can violate it. But we've held this psychological number 2000, so I'm not too sure how much lower we can come until we take a closer look at price action. Oh, you're long at 131.15. 1 second, guys. Oh, I just had to sneeze there. I literally just muted that button in time. Oh dear, you would have all been deaf. So you're long Can, okay, at 31.15. So Can is long the retest of the structure level, playing for a breakout higher. Oh, you're in the pound New Zealand. Okay, I must be a little bit behind with the chat. This 15-second delay doesn't help, but okie dokie. Oh, come on, pound dollar. Don't be playing up. Okay, here we go. So, right, now we get a closer look at this level, which has been a major level for me. It's had a double bottom, so look at what price did. Came lower, it saw a pullback, it came lower, it double bottomed, and boom, look at the size of reaction that we saw at that 2000 psychological number. So we could see a small reaction here to the downside, but how far we will actually come, I don't know. Let's look further left. Yeah, I've loaded 4,000 candles, which is 12 years worth of data. We are at 12-year lows as a minimum. Will we go any lower? I'm not too sure. So if I was to get involved in a short opportunity here, guys, I would be conservative with either moving my stop to break even or limiting where my targets could actually be. So let me just where's it gone? Let me reload my template here. Go back to the 240, because this is a valid triple top up here, guys. Double top and a potential head and shoulders. So head and shoulders is a swing in the market. You're looking for a directional move, a pullback, and then you're looking for price to retest previous structure highs, which is exactly what we did. And the problem is targets. Where could targets actually be? Well, if I put a structure level on here, you have this area, and it also comes in at a 12200 psychological number. The problem is I just have no idea where targets could actually go. So if you wanted to be more conservative, as mentioned, wait for, so this is the double top. So we saw a move higher, we saw a pullback, we saw a move higher. Wait for a break below, close below, throw a fib on, look for that 61.8 fib, which is here. Clear that up correctly. This would mean your risk on this trade has been reduced down to this much, and then look for targets. Minimum of an AB equals CD pattern, and as a minimum, look at this area. If this is a head and shoulders, it's going to be, you're going to end up breaking below this level. So yeah, as a minimum then 12200. Yeah, 140 pips as a minimum on that trade. But wait for the extra confirmation, wait for the 26.18. So I'm going to make a note of this actually, because I'm going to be waiting for the break below, close below, and pull back for that 26.18. So pound dollar, 240, double top plus head and shoulders. Okie dokie. Any questions on that? Just take a quick scan at the 15. Nothing on the 15. Martin says target could be daily 26.18. That's a very good point. It isn't going to be a valid double bottom for me though. That's the only problem, Martin. Okay, so we have double bottomed and we have broken above the V point just here. It wasn't a double bottom for me though, because okay, this structure level here is on the closes of the candles. You know what, let me double check this. Yeah, see here, this is the closes of the candles, and the first test needs to hit and it didn't. There's a gap. So even though we have technically double bottomed here, this was not a valid double bottom for me because we didn't hit on the first test. So in actual fact, this is just a trend rotation. We had a move lower, a pullback, a move lower. Now we only closed here, but we spiked and tested the structure level and then reversed off. So even though it is a double bottom, it was not a valid double bottom, and because it wasn't a valid double bottom, I wouldn't take targets at the 61.8 fib. Yeah, so I see what you're looking at, and it's a very good idea. If it's valid for you, no problems at all. It's what you're back testing, what you've tested. But for me, because it's not a valid double bottom, I have no reason to believe then that the price was going to reverse to come to the 61.8 for a 26.18 trade. But I completely understand your thinking behind it. So who knows where price could go. We could actually just, we could come all the way down to this level for the head and shoulders. What I have noticed, and I've never actually tested this, but I've traded head and shoulders for so long now, even though I haven't really had one for 2 months. It's been crazy. I was taking at least one head and shoulders a week, sometimes two. I haven't had one barely in 2 months. But what I've noticed is that when we have this very big impulse leg, this very directional move, the majority of the time price does come down to retest the bottom of it. Okay, I've got no confirmation of that, but that's what I typically see. And if you wanted to take, say, first targets at this 12200 and hold second targets all the way down here, well, you're looking at a very big trade of 355 pips. So that is the pound dollar. Anyway, nothing to do on it right now, apart from wait. New Zealand yen, we were looking at a trend continuation opportunity. Look at that. Look at that. It played out brilliantly. Didn't provide an entry. Was anybody in the room last webinar? I don't think we've got anybody that was in the room yesterday, but I'll do the high time frame analysis in a minute. But this was the workings out. Trend continuation, move higher, pullback. We saw a move higher here, and this was how the trade looked yesterday. And I said we can look for a reason to get involved, and what we can do is we can use all the tools in our toolbox in order to break down the area where we think price could turn. And we did several things. Let me just go out to the 60. 240 was it maybe? Okay. Now see this big red line? I was wondering what that was. I remember what it is now. So let me go back to the 15. So I put this big red line in it just here. And I did that because we had a psychological number, and I said psychological numbers are incredibly important on every time frame and on every currency pair, because Every 100 is a psychological number, and price action moves based on people's interpretation of the financial market, and all human beings have a psychological response to a whole number. So for instance, if I was to say to you, if I said to Martin, remember the number 100, okay, now remember the number 64, you have a far greater emotional response to the whole number, which is 100, rather than 64. If I said, Martin, remember the number 1 million, now remember the number 649,362. Okay, you're going to remember the 1 million. Okay, it invokes a response, and that's exactly what happens in trading. When we have a psychological number, people, traders, see that as structure, support, where we see double tops, double bottoms, head and shoulders, where we see rotations, and that's why I highlighted it in red. I then drew out what we could see. We could see a move lower, we could see a double bottom, a break above, close above, a pullback for a 26.18 and a move higher. And look at what we did, guys. We literally just tapped that 6900 psychological number. It didn't give us a double bottom, but I'd drawn out here the risk, so it would have been a winning trade, and targets were a retest as a minimum of the highs. Let's look left. What actually happened? I'd already highlighted some structure. I think we threw on some fibs. I don't think there was any fib confluence though. Nope. I also said that we could see a few things. We could see AB equals CD patterns here. We could see bat ciphers, Gartleys. We could see the rotation pattern, whatever it may be, to give you the entry. So it's great to see. Lovely to see that it played out. Again, not involved, obviously. We want to be involved to make money. But when you start doing things like this, guys, when you start breaking down the analysis and you start using your fibs, your RSI, structure, psychological numbers, bat patterns, ciphers, Gartleys, AB equals CD patterns, breakout patterns, higher time frame confirmation, you start using candlestick formations, dojis, 3-bar reversals, things like that. All of a sudden it starts to come together, and you're able to break down the areas where we think we can see the rotation, and then you wait for the confirmation. God Save the Stream says hardest working man in Forex. Nice. I have put a huge amount of years and years of work into back testing. But you know, my trading typically doesn't see a big drawdown, and I typically don't see too many losses in a row. Last 2 months for me have been diabolical, really, really bad. But the last 2 months does not mean that the previous 5 years of trading that I've done are wiped out, because just 2 months of bad trading doesn't wipe out 5 years of good trading. And it's not going to wipe out the next 20 years of good trading that I will have, minus a few blips here and there. So there we go. Lovely to see it play out. Let's get rid of that. What next? Okay, the last trade that we're going to look at, guys, so if you've got anything else you want to take a look at, let me know. But the last trade was also the dollar yen, which again was another trend continuation. Move higher, pull back, move higher, pull back. And if you look at what we've done now, guys, move higher, pull back, move higher, we are once again seeing a pullback to our outside return. The question is there room to go higher? Well, let's do the full top-down analysis on this setup. Structure level on at our lowest point, which is just here. And let's look right. You can see price has come into the area that I expected to be tested, and we have now seen a move higher as a result of it. Question is there room to go higher? So let's draw out the trend. Move lower, a pullback. Move lower, a pullback, a move lower, we saw a pullback, we kind of double topped here, and then we broke to the downside. Oh my god, wrong shortcut. Move lower, pull back, a move lower, and then we broke to the upside. So the absolute maximum area where I would look, well, this is the entire outside return first of all. Targets, the absolute maximum targets though would be up here. Okay, that would give us a retest of the very, very highs. The problem is we're kind of in the middle of our structure zone, and so we may not see price continue. Okay, we don't have a clear reading that price will continue all the way up to the highs. In fact, right now we're testing a psychological number 108, and as we see time and time again, we tend to see reactions at those psychological numbers. Now the RSI here is not overbought, we're only at 75. However, yeah, so we could see a move higher here, but we don't have any real confirmation of that. So let's go down to the 240. Here on the 240 you can see this lovely trend. Look at this, long extension, small pullback, long extension, small pullback, long extension. Okay, so very, very nice trading opportunities. These are the ones that provide you good reward to risks. Let's go down to the 60. And I would pay initially close attention to this little blip here. So because the trend is on the 60, if you believe price can go higher, well, first of all, you don't need, first of all, to play for an extension. You could actually just play for a retest up here. If you don't think price can go any higher, then what you do is we drop one time frame lower down to the 15. We wait for price to come down into look at that, double top. I cannot take trend continuation trades when we have a rotation pattern. And that double top has happened at a psychological number. We've actually gone 10 pips past it. But on the higher time frame we are at that psychological number. So once again guys, okay, I do have people saying to me, why do you take psychological numbers into account? This is why. Look, we saw a double top at that psychological number. How many times have we seen reactions at them? Loads and loads. So there would not be a trend continuation trade on the 15 because of the rotation pattern, so you'd have to take it on the 60. So you'll be looking for price to come down, put in a higher high, higher close. This is the outside return. Stops going ATR below it, and I would simply only play for a retest of the highs. But that would provide you a positive reward to risk because I've got no confirmation the market can go higher. So you could just use it and play for a retest. Yeah, exactly, Khan. Volatility, double-edged sword. So that is what you can look at on the dollar yen. That's it guys, there is no other opportunities to look at, so I'm just going to do a quick recap. Quick recap is the Aussie dollar. First of all, trend continuation, you can look for a pullback, look for bats, ciphers, Gartleys, look down here for an AB equals CD pattern, look for a double bottom, look for a head and shoulders. Let's move that out the way. We're still waiting on a very big Euro Aussie trade. Feels like I've been talking about this forever, but I would love to see some sort of rotation pattern to get involved in that trade. The Euro Yen was a trade that I won on for those 55 pips. Euro New Zealand, pay close attention to this. This highlighted blue area is the entire outside return, but there is an internal level of structure here that you maybe want to be paying attention to for a short opportunity. The Euro Dollar is the trade that I'm in. It is providing you a 2618 trade and also a potential flag to short the market. That looks very, very nice indeed. Dollar yen, which is what we've just been over, the trend continuation opportunity, and New Zealand yen. I'm going to delete that now because that trade is actually played out. So I don't think there was anything else that was worth going through. No. So that's it, guys. So thank you very much for joining me on another webinar. It is good to eventually start seeing some decent opportunities in the market starting to play, at least decent opportunities that met my rules, because for 2 months I've had opportunities which did meet the rules, okay, and were valid, but due to all the uncertainty, pretty much every single trade I took was stopped out, and we're back now, as to what I can see, we're back to start seeing some normality in the market. We're seeing structure being adhered to, we're seeing double tops, double bottoms, some potential head and shoulders and breakout patterns setting up. So very, very nice to see that. So I'll see you all within the chat, guys, and thank you very much for joining me again, and have a wonderful day.